Good. So you can see my screen. Last week I used this particular chart to teach us. Today's meeting is very, very, very important. We'll be looking at 6 pairs. We'll be looking at 6 pairs. We'll be looking at JVP, JPY. We'll be looking at USD, JPY. We'll be looking at USD CAD, Euro USD, NZD USD is the new addition, and we'll be looking at AUD CAD. We'll be looking at those 6. So if you need to communicate with me, just type. Mute your phone, your microphones, please. Like I told us, in analyzing anything that you want to do, we look at the weekly candle. So each candles that you see here, like I told you last week, it's a week, 1 week event. Now this last week, this is what you can see. This one was selling. Now, one week event, and all these ones also are one week events. And I said that before you go further, we might have to zoom out to know what has the market been doing in the recent time. We can zoom out to have an history of the market. So if we zoom out, this gives us a history of the market. Okay, so this gives an overview of the market since the inception of this particular currency pair. I'm trying to zoom out. I taught us this last week. For the benefit of the people that we have that are new in the house, I taught us this last week. So this is the market. Started from here. This was around 2002 May till date. So this particular currency is USD MZN. So that's the currency that I have here. Of course, for the purpose of training, I'm using these. Just for the purpose of training, I will still be going back to my analysis. Now, the market was more or less this area on a larger time frame. If you can't see, if you're having problem with image, so I'm giving you image. That is what I'm giving you. I'm opening my chart for you to see. In case you are seeing the image, it is the image that I'm giving you. The chart. I'm out of your view, so you can't see me personally or my image, my picture, but you can see my screen. So if you can see the screen and my cursor that I'm moving, yes, that means you are on with us. This is where we are. You are on with us live. So, more or less, between here and here, we have a small buy and consolidation on a higher time frame, then a spike to buy, and sliding down a bit to sell and consolidation around here, then a big buy to this point, and we have another consolidation. And I told us the importance of this particular black line. This particular line is an indicator. We call it EMA 200. It's an indicator that tells us, what is price doing? If you see all this wave above this indicator, it means that you can hardly hear me. Is there any other person that is having the same problem, difficulty in hearing me? If you can hear me very well, please type you can hear me very well, so that we'll know that some people are having network problem. Okay, yeah, some people can hear me very well. That's okay. It might be network in your area. Good. Okay, yeah, people are hearing me very well. That's the most important thing. If you're having challenge, just type so that we address your. Yeah, good. So, yeah, good. Yeah. So now, good. So I want us to pay close attention to all this. So the price above this line, which is EMA 200, means that the price is buying. It's buying. So if the price is below, good. If the price is below it means that it is selling. So it is selling on a long time. So if you cannot hear me, it should be your network. The currency we are looking at is USD. Let me see. USD peso. That is the currency. I'm just using it for the purpose of analysis and training. So USD and Mexican peso. But I will still switch back to our normal currency. For the better benefit of those who are new here. Yeah, good. Now, we said when you do this, what we want to do is to draw what we call resistance and support line. Resistance and support line. So we look for how to draw that, and like I told us, there are key areas of resistance and support which we must draw. A resistance, when the price is moving above to break, and it's a support when the price actually is resting on it. So at this point we can draw one resistance because the price was not able to break through this place. So that's how we draw a resistance. You can see this price got here, bounce back. So this is a resistance. An example of another resistance will be, just watch me, it's this one when price cannot actually break through this point. This is another example of a resistance. Price cannot break through this area. Another example of a resistance is this area where you have this. Now, if you watch, price cannot break through this point, cannot break through this point, cannot break through here, and you have clusters of, price trying to break through. So this is a resistance here. This one is a resistance to this, and this one is a resistance to this. So I want you to see that. Example of a support that the price cannot break below it is this one, for example, here. So this particular last line is a support here. The price got here, bounced back, it couldn't go below it, so it's pushed it back upwards. So it became a support here, but here they were more likely resistance. So price couldn't break through at this point. So price went back below it, got up to it again, went back, couldn't break it until this one price broke it, and to hit another resistance here, it couldn't break. It went backwards, then broke it, got here to meet another resistance. Then it came back down and down. Now couldn't break down from here. This now became a support for the price to push, make several attempts, 1, 2, 3, before eventually breaking through here. So we can see that is how we draw our support and resistance. Of course, if you want to draw another resistance, please make sure that you put your microphones off. So this area will be another good level of resistance. So because you have to, there before it becomes so important, there must be many points touching it. Like here it's a resistance, here is a resistance, here is a resistance to that. That's how we draw our resistance. Support also can be here. If you look at this point, the price actually tested it here, rested it on it, and pushed up. It's a support. So we have support and support. So this point became resistance around this area, resistance around this area until the price broke through it to meet resistance here, then broke through another resistance, then bounced back to hit a support, got to this point, resistance, came back to this support and broke through this particular resistance, then went through this. There are so many actions here if I expand, but I'm just going through this briefly. Now, USD Mexican peso has been quite reasonable. If you can't hear me, please check your connection. So, US Mexican peso has been quite reasonable here. Not much big movement until here and this movement, but here, this one is unusual. You can't hear me. Please check your. Please check your.
Can
My
hear you
microphone
now.
went off. Ah, my microphone went off. You can hear me now. Thank you. So, I was trying to give you. Yeah. Okay. Okay. Biola. Thank you. So I was just trying to give you a rundown onto how we draw the support and resistance. But here, this is a crazy spike. Yes, this is a crazy spike. Is unusual, and this movement was responsible for by was caused by COVID-19. So the news around COVID-19 produced this. If you look at the story, it's uh, somebody is unable to join. Continue to try because we are so many on the up today, on the call today. So we are so many. That's why we are having some challenges now. But I hope subsequently we will overcome that. So now at this point, this is where the price is now. The price, more or less, on a long time frame, long time chart, consolidated, moved up and down, consolidation here, then a spike to buy, another consolidation on a higher time frame before this. So the price actually is using EMA. I've taught us that as a support here to push up. So the price is still buying. So what we are going to see is more of a pullback to sell before it, moves up again. By the time price is approaching and trying to pierce the EMA, then you can be thinking of what will happen next is consolidation around EMA 200 before eventually selling. So, but for now, this is buying on a long time frame. So, let me try and increase my candle so we know that this particular chart is buying. Now, there is one important thing I want to show us. When you see price like this, and the price is trying to fight back, because now the price has been selling. Though this candle means selling, the price has been selling before this candle. So the extent of the selling is not from here to this point. Oh, you'll be making a mistake. It was when the candle was able to cancel the highest one that you can now see this forming. So there had been some selling, good selling before this one can form. So the price has been selling from this point up to this level. So if you want to know how many pip is that before this actually showed up, that is about from that tip to the just below the red candle, that's about 26,041. So for that particular currency pair. So, and if you want to project, where is this thing likely to turn out? If it's, when something is buying, we say buying means that it is trending up. So uptrend. So we look at the highest crest here. So the highest crest here is around this point. You can see this, and the highest crest is around this. The highest immediate crest is around here. So we are likely to see the price. At least price should get to this region. We are not sure if the price will get here, but price most of the time will get to this region before pushing up again in an uptrend. Price should get there. I'm off again. Opario. Let me check.
Yes, sir.
Yes, sir.
The thing actually has been selling from this point up to this particular point. So if you want to know,
Which pair are we dealing with, sir?
I'm just showing us for. I'm just teaching something. So I'm not. I'm not on the pairs that we usually do. I'm on USD, dollar, and Mexican peso, just for training before going to what we have to do. Now, so we will expect that the price
Okay.
will get to this point at least. So we expect price to get to this point. Let me just pick something to show that. So we expect price to get to this point, which is the highest crest. At least we still expect a sale to this point before making another trend up in a normal trending market. In a normal trending market, that is what you expect in a normal trending market. But before, in a normal trending market, if it's an uptrend, we expect a longer arm and a shorter arm. So a longer arm, which is if it's buying, a longer arm from here to this point, and a shorter arm might just be from here to this point, before it moves further up. If you got that, type yes. That is what we should expect in a normal trending market. Now, this is a big spike and it's unusual, it's abnormal. So, everything is simmered down now. So, what is no? You can't hear me. Or you didn't get what I said. I said this thing bought from here up to this point. So,
Okay.
okay, it bought from here. That's a so if the market is trending up, you expect the price to move up, and when it changes trend, it's going to move down. But in an uptrend market, the up arm will be longer than the arm that is coming down. So the arm that is coming down, we expect the arm at least to get to this point before it turns back. It might not get there, but we expect the arm to get to this point or somewhere around here. Anything can happen. So that is what we expect. That's in a normal uptrend. If it's in a downward trend, of course, you expect the red to be longer and the bulls will be shorter because it's now downtrend. Now, with this in our mind, with this in mind, price will always do some funny things. Good. Price will always do some funny things. When we see big move, we are happy that it's big move and you can get to your destination where you expect the price to be in a short while. But most of the time, price will not do that. Like now, we are in a sell and the price actually first moved down bam to this point and the price has been dragging. The price might drag for a long time before it gets here. I'm going to show this on the trade that we are doing for you to understand, but I just want to establish something here. So the price is moving down and is not fast moving. So and we might not get here on time. So you can see a sharp. If I go, let me go to daily candle for you to see very well. Let me go to daily candle. Let me switch to daily candle for you to see very well. Good. Now, initially you notice a sharp movement from here down to that point. A sharp movement to that point, and thereafter they pulled it back up. Another movement down here, and you can notice that again the bulls took over to do another pushback here. So the way you are having these on a weekly and a short arm on a weekly, so you are going to have Also, in a pullback, this one now is more like a fight back. They were trying to fight back, they pushed up, and for this one to form. So this one is now a pullback. It's no longer a pullback of the bears. Now, bears are the bears is selling now on a long trend. Is selling and a short pullback by the bulls. And here, they indicates that the bears want to take over again to sell. So we might drag and drag eventually before we get here. And once we are here, anything can happen along the line. Anything can happen along the line. So what do we see most of the time in a trending market? The market could trend and move, bam, 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 bam. And at some point, the market will now begin to consolidate. The market can consolidate within a price zone. Can consolidate within a price zone. And that could continue for a month, for 3 months. At times, it could do 1 month, 2 months. Market will just continue to consolidate. But we must be ready when market is consolidating. You must be ready that if the market begins to over, for instance, if we take a consolidation zone to be around this point, if we take a consolidation zone to be around that point, for example, so the market has been moving between this zone and this zone, and we are going to trade carefully around this zone, having at the back of your mind that the price is likely to break down than move up. It is when the price is getting to this point and is consolidating, you now begin to think the price is likely to move up than to move down. But at this point, the price is likely to move down, to break this place down, than to move up, because the price already has made a U-turn. There's a strong signal here. They fought back, and now they are pushing it and pushing it. So this is making an intention to come down. A short pullback is not as the pullback we had here. Is this one is not as big as this. So now the price will continue to sell big once the price gets to this level. Once the price gets to this level, once it gets to this level of virtual support, where I have my pink line, so the price can break and will now continue to sell below here. But mark you, activity here might go longer than you expect, and you might be impatient that we add movement from here down to this point, and all of a sudden the price is now not moving beyond it. So we are going to look at how we negotiate and how we trade when it's consolidating, and how we take something out. Now, I hope you can see me, and you can hear me and see my screen. I'm going to divide this zone into two. Let me divide this zone into two. Let me divide that zone into two. I'm teaching something. Assuming I divide this particular zone into two with that line. So you can see I've divided into two with that line. And let me now switch to 4-hour time frame. Now, I hope you can see that. If you can see what I did and the way I now divided into two, can you type yes if you can see my screen? Good. Now, what I have told you so far is that there's a change of trend. Good. There's a change of trend. It's been buying, then all of a sudden it starts selling. It sold to this point, yes. It sold to this point, and what did the price do? Price now shifted back upwards. Good. it shifted back upwards, and you see the price now didn't make it down to where it went up. So price got to this point, this pink line, and went back to create a zone around here. And if you're not careful, all you want to do is that you are reading that the price will get here. It might not get here. Thank you. So it might not get up to this point again in another 2 months. Price might not get up to this point again in another 2 months. So what do you do? Now see this. It broke down because it's still planning to come down. Then it got to this point. It touched this area, and we are now within this zone. So price got to this point, and it's like it cannot break this zone up again. So it got to this point, it could not break this zone down again. You will think that what is wrong with the price? Shebi, you did this one. Why did you just get to this point? There is a whole lot of force, playing supply and demand, forcing the price, and a battle zone was drawn for quite a while, and now it's selling. It might not break below this in another 2 weeks or 3 weeks. It might not. Now, how do we trade? Because if you move up here and you think, oh, should be selling, people might lose money between here and here. And you think, oh, we are here, it should come down to give me TP, and it's not doing that. It went to this point. By the time it decided to come down here to ETP, you are out. And it's consolidating. It moved up to this point. This zone is clear. And here, we are here. And maybe you cashed out here. And this week is moving. It's like it's not coming back here. So price might just decide first to play at the upper zone here for long. Then decide to shift to the middle for another 1 week or 1.5 weeks, and decide to come to the base for another 1 week or so. So how to trade when the price is being delicate and doing all sort of stuff like that is why we are here now. That is why we are here. So when price is actually, in some cases, price will just be transversing like this within the zone. It's much easier to trade when it's doing that. Moving up within the zone and touching the edges is much easier to trade. The only thing you know that, okay, there is tendency for it to break down here. But when price move to this point and play around here for some time, and it's like it's not coming down. So when you expect the price to now stay in that zone, then it shifted to the middle or to the base. Then at times you might see price actually breaking through this zone. It might break through this zone and get very close to this point to create another zone. So they might create another consolidation zone, shifting all these things a bit backward to bring the consolidation zone very close to this line. Then they'll begin to play around the new consolidation zone. So you can have sets of consolidation zone forming. So we must be wary. So that is what we are likely going to see, and I'm going to go to our trade now. So let me switch to our trade, which is JBP JPY. So let me shift to that trade. So we have shifted to this trade, JBP JPY. That's the trade we've been doing for some time. And I would like to go to are you still here with me? Can you hear me? If you can hear me, please, just one person should indicate if you are still here with me before I go forward. Please type yes if you are still here with me. Okay, thank you. Good. So you are here with me. So if the history of JPP JPY, we've talked about it. We said a week. Now, just like I told you, a week, good, is alright. So a week. This is weekly candle. This is weekly candle. So this is around September. The price moved up here to move down. And like I told you, when you are trading this particular pullback, this is a pullback, it's buying. This is every week. Good. Good. So you can see this week movement. This movement is a long candle. And we add this because of the COVID news. We add these big spikes. So one should have expected that the candle will begin to buy and move quickly. It's like it's not doing that. The price voraciously move forward, move up from here to this point of about almost 900 pips. And after that 900 pips, price has been behaving in a way that you won't expect. Price has been behaving itself in this zone of less than 350 pips. Price moved like times 3, and it got to that point, and within 1 week or so, price moved up to this point, almost 900 pips, and within 300 pips, we've been there for 3 weeks. How do you explain that? You can get frustrated if you don't know, but you can also make big money around here. So no matter what the price does, we want to make something out of it. Now, in this pullback, where do we expect this thing to get to? Like I told you, this happened for almost 6 months. Now, in a short while, it went down. So I think reasonably, I would think that the price might just get to this level of the price, at least, before it begin to turn back. So if I want to see that, let's see, at what level is that? What level would that be? You might think that if I use my, what color do I use now? Let me use brown. So I might expect, oh God, it just brought everything out. I don't want you to bring things out now, Jerry. So, yeah, we expect the price to be around 137, 500 or 500 or 450. 137, 450 before we begin to think that price might want to, move down again. So price, we expect price to be at this level before it begins to say, oh, I want to move down again. I want to bring back my drawing for analysis. This is just the one I picked just now. So this is where I expect the price to still get to. Now, I did something, usually for clarity and for good understanding. I did something here. I tried to divide every candle into wick, and I will keep this line for us to know if I go to lower time frame, for us to still have that wick thing at the back of our mind. So this divides into week. So we have like almost 4 weeks now. This is the first week that the thing has been buying. It sold us to this point. So this is the first week in red. It bought. And it's now showed the second, the third, and the fourth week. So we've done 4 good weeks. We have done 4 good weeks. And in the first 1 week, price moved up to this level of about 1,050 pips. The price moved up from this level to this point at about 1,050 pips. Because we were careful, probably we had about 600 or 650 pips because we didn't want to enter when we are not so sure. So probably we lost about 300 pips or so, but we still had like about 650 pips out of that. Then price now sank back, moved backwards. That was why we lost that, and we had like 600 or about 650 pips or so, or 600 pips here. Now the second week, price over between 218 pips, consolidating within 218 pips. That was very marginal. The second week, price was just in between 284 pips, and this last week, price didn't do 200 pips at all. Price did not do 200 pips. Price was just in the range of 180 pips. So, which probably will make it very difficult for anybody to cash in. About 180 pips. That's the last thing. So let's switch to daily candle. I just need at least one to explain for you to get very well. So all these are week, 1 week, 2 weeks, and 3 weeks. So price moved up to this point from this brown to this level, and it did about 1,000 pips. Now, between this level, which is the second week, and this point where you have my green, price was just consolidating. It has been consolidating around here. So this consolidation here, from here to this point, is just about 218. Now, if you follow the third week here, price moved a bit up. Price stopped at this point of the first lemon. Price stopped there the first week. The second week, price moved inward to do about 218 pips. The third week, price shifted from this bottom a bit up to create a pattern of like an ascending pattern, like more of an ascending pattern. That's a trending market, uptrend. But it's not uptrend, it's just a gimmick. They did that as if they were going to break this point. Actually, they broke this point. We saw it. We waited for 30 minutes candle, 3 of it to form. But at the end of the day, what they did was just to create another zone. They were not ready to move up, but they shifted up, by almost how many pips? Let me see. They went up by almost by almost 94 pips to create another zone. They shifted away from here, and now the upper zone here almost correspond to the lower zone here. So price didn't buy again, was now sold into the fourth week, then bought into the fourth week and sold here. Now, if you want to do analysis, you see this one as if, it's buying on a daily time frame. If you enter it's selling on a daily time frame. If you enter sell, you might be shocked. You might be surprised. You look at the candle formation, the body of this one, how thick they are, and these were more like a doji on daily candle that had no volatility, and they took over. Bulls are not showing the kind of strength that you expect, for sure, but they are still there. So, but now we've been having consolidation for 1, 2, 3 weeks, and I still expect that consolidation to continue this coming week. When they decide to break for good, we'll follow. Whatever they want to do, we'll follow. The only time you'll be worried is that once the price makes it back to this lower level, lower limit, and is breaking, just know that the trend has ended. The pullback, a long pullback has ended. They want to sell again. Once it breaks this downward, they want to sell again. Now, I want us to see activity that occurred in this zone very well. So let's shift to 4-hour candle. Now, that is the 4-hour candle. That is the 4-hour candle. We started from here. The price got to this point and moved back in. And this is what I said between this zone. If you look at this zone, just count. We got in from here somehow, and the zone that we had last time, the blue part or the turquoise blue part, was here at this level. So I had moved it upwards to create another zone. I have to look at the 2 last week to create that zone. So it has moved, shifted from here to this point. So price is here. So we have to engage the price around this area. So we had this consolidation like this. And if you see the way price is wrapped around here, you will see it better when I go to maybe 2-hour time frame. Just see this. Price moved up to this point. Then the 3rd week, price left this point to create another zone upwards. So they moved above it. So they moved above it to create 1, 2, 3. Before it was 1, 2, and 3 here at this point. So price is no longer in this zone. Gradually they were here between the 2nd and piercing into 3rd, but now price is made another zone up here to move from 1, 2, and 3 in the 3rd week. And in this last week, so let's see what the price did. In this last week, price now came back from this zone. This was what got us out. This got us out. So you saw big movement here, and everybody thought, oh, it will continue, but then it didn't. They tried to force price back, so they are in the middle zone. Presently, the price is in the middle zone. So the day price gets back here and pierces this particular one, the last green lemon, then I might be thinking that price is no longer going upwards. So I try to keep all these lines for my analysis. If the price creates another zone up, I will draw another zone. But when the price decides now to move big, we'll follow it. Now, let me switch to lower time frame, 2 hour, or let's say hour. Let me go to hour time frame. Good. This is our time frame. We are seeing the way it was distributed on hour time frame. Good. So this is just 2 weeks. Like I told you, it moved up here and price checked out here. So it's going to be difficult for anybody that is born of woman. When the price moves here and is consolidating, you expect the price to probably come down here to consolidate to cash out. Price didn't do that. It did this for a long time. How do you want to eat something here? And that is why me too, I said, no matter what you want to do, we will pick something from you. And that is why I'm teaching this. Price did this sharply to go up, and you expect the price to come back at least to cash out around here, around there. It didn't happen. Price stayed for how many days here? You see, each of these is 5 days. 1, 2, each of this box is 1, 2, 3, 4, 5. So price after this week stayed here 1, 2 days before eventually coming down here. We expect that, of course, price will push further up, and price even stayed in this zone for another 3 days. 1, 2, 3. This is all rubbish. This is wickedness of the highest order. This is what? Wickedness of the highest order. 1, 2, 3. 3 days and up here 1, 2. So if anybody wants to eat anything, which you couldn't have predicted this move, that is probably to move from here to this point. If you entered from here, you were expecting it to go up, and it didn't do that, then it came down here. So nobody would expect this. So likewise, what the price is going to do now, nobody is expecting that. But see, I have good news for you. No matter what this thing do, we are going to kill it. We are going to kill it. Now, so what do I concern myself? This is hour. Like I told you, we have 4 types of trader. Scalping, me, I'm not going there. I can do day trading now because it's narrow. 180 pips is within what a day trader and a swing trader will take. So we want to stay in between that lane now because of this consolidation. Day trading and swing trading is what we're going to do to take something from here. And when the market is now back in its normal trend, we'll now begin to do position trading to eat part of it. Continue to eat. So no matter what phase the market is showing us, we are ready and determined to kill it. Now, there is something that is important I want to tell us, and I want you to get that. The way I drew support and resistance, when price is consolidating like this, we are going to draw a support and resistance, but on what? On 30 minutes candle. Those support and resistance will be our TP point and our entry point. So I already drew this as a possible TP or entry. So I'm going to zoom out. I'm going to zoom out to see how I came about drawing all of that. So I'm going to focus on these 2 weeks. Let's focus on these 2 weeks. So if we focus on these 2 weeks, it will mean that, this height here, we have price here and price here and price here and price here. So it might be a point that the price might likely get to. So I will put my resistance here at that top. That is a possible place for price to reach. So it could be a TP. So because the price actually touched here and touched here. And if the price is going to make it down, it could be an entry point. So if the price is buying, it could be a TP. And if we are selling, it could be an entry point. Okay? So here also, I have my price touching around this area. And this area, we have confluence. So it means if I'm buying, this might be another TP point. So we might have TP1 and TP2 here. I hope you are getting that. Now, coming down here, I have another place where price has made a U-turn here. And here also, this could be another entry for a buy. If I want to buy, it could be an entry for a buy to go up. Then, of course, this could be another entry for a buy to go up. So if I'm buying, it could be entry for a buy. But if I'm selling, it could be exit, which is TP for sell and TP for sell. Entry for buy here to do my TP here or my TP here if I'm buying. Did you get that? If you got that, somebody should just type yes before I continue. Somebody to type yes before I continue if you got that. Okay, thank you. So we went to 30 minutes time frame because we had created the zone, and we have to look at the crest here where price actually touched most, and another point here for possible TP if we are buying TP point to cash out. And if you want to buy, this area should be area that we can say our entry here, our entry here. If we are selling, this could be our entry or our entry for selling to TP here or TP here. Decision to TP and where it's likely to get to, I will explain that later. So I have 1, 2, 3, 4 resistance and support that I drew. So I want to see how helpful, how significant those points are. 1, 2, 3, 4 in the past, at least in the past 2 weeks that we did. So I'm going to take my screen, push my screen. This is one of it. It's too much. It's too much. You must still be able to see. So this is the last one I drew here. So in this zone, clearly is the first time that the price is playing up there in a long time. So we are price has not reached there. I just drew it today, so price has not got there. So but the second one here, price actually touched that point to move back, and of course these other two, price had played in those zones. So you can see that they touched actually around this area. Price touched severally around that area. The first one is up here, so price also, this one is significant here. Price actually touched here, and price actually played around the second one here, and I have my third, which is this one here. Price actually, you know, made some U-turn around this here, more or less a support here, support and resistance around this area. And the last one, price actually made this one as a support and a support and a support. So it looks more like gradually price is still climbing up on JBP JPY, but it's not like a fast rising or fast ascent. You know, this was our base. This particular was our base, and price has shifted upward. So if anything, if I want to now probably put my stop loss, if I don't want to be greedy, I can still put my stop loss here. I can put my stop loss here because price just moved in the last 1 or 2 weeks. So I can still use this point as my stop loss. And if I want to take some further risk and I'm very observant, I can still put my stop loss just at this level of 13226 something. So I can still put my stop loss around this area. Now, if I now want to engage this particular one, what do I do? If I want to engage this particular one, because presently price is in the middle zone of the new three zone created. So the zone above this lemon is the first zone, the zone between these two lemons is the second zone, and the zone between this and this particular line color, shaded color, is the third zone. Price in the third week or in the last week is between the second and the upper zone. So price was not able to break below this zone. That is what you can see. So I might think that in the meantime, if once the market opens, of course, it's showing that it's buying. This market is going to buy once it opens, and it will buy, and to do my TP somewhere here or move to this point. So what have I done? So I'm going to put an entry just below here at this level. That will be an entry, and I will say if something happens and the price still knocks on this particular support, we might go all the way. So I'm looking at 2 entries. So one entry below the price level now, and another entry here. This might be unlikely, we don't know, but the one here, the price might just come in to take us to probably cash out here. This point might just be a TP for me, and this one would just be second TP. So most of the time, this is what I do. If I pick my price up here, I want to look for quick exit because it's just in the middle, it's not comfortable. If I'm picking price at the edge, if my entry is at the edge, then I can go all the way up. It's safer. And that is the way I write. When I quote, I put entry. If my first entry is up here, I want to exit as quickly as possible to be safe. If my entry is down here, I can ride up to this point. I have freedom to ride up to this point and watch the price. So the narrower you have to the middle, you don't want to take too much risk. So if I'm picking price here to sell, so, and if anything, so I'll follow it, or from here up. So, but mark you, there's tendency for this thing to buy, to still break into another zone. So that might happen this coming week. The price might just move beyond this and break into this upper zone. It's not likely that price is going to want to push down into this zone. It's not likely, but if it does that, it's okay. Whatever it brings would follow. Now, here comes another thing. When you are consolidating, really, RSI, which is this you have here, that shows overbought, and the shape of the candles might not really be helpful. Might not be helpful. So, I'm going to introduce something to us, an indicator to help us, and to confirm if we are good, and to also confirm our entry and our exit points. And I will believe that anybody will be able to see this indicator. Even the newbies will be able to see the indicator and say, okay, I think it's time to go out. So because we are consolidating within a small time frame, we will be using this indicator on 1 hour. We look at our 1 hour time frame or chart. The indicator also is applicable for any of our trades, either daily trade or swing or position. The indicator is useful for any of our trades. Has anybody heard of alligator? Alligator. Have you heard of alligator? Have you heard of alligator? You can see my screen. I said,
Yes, sir.
Do you know anything? Have you heard of this alligator indicator? Have you heard of that alligator indicator? This. Have you heard of it?
No, sir.
Okay. If you have,
No, sir.
so you can mute your microphone. So if you had heard of alligator indicator, please type yes. If you have not, type no. If you had heard of it or you've seen alligator indicator, type yes. If you have not seen it or you've not heard of it, type no. Alligator indicator. Well, nobody's, no response here. You can go to it later. If you on your trading view, if you click on FX, then you can now search for alligator indicator. Just apply it. I know on trading view you can only have like 3 indicators, and the alligator indicator is a combination of 3 indicators. 3 indicators. So I have my MA200, I have my RSI, then this is my alligator indicator. Is coming up now. This is my alligator indicator. So this is my alligator indicator, which you can see. Now this indicator, let me come out here. Now in this indicator, you can see my green line, you can see my red line, and you can see my blue line. Those are the indicators that will help us to quickly know that even though from technical analysis point of view, this is what we are doing, and we can reconfirm our entry and exit with it. So it might be difficult for most people to see entry and exit, but with this alligator indicator, at least you will be able to see something very fast. Now, what's the importance? The green line responds faster to price change. It responds faster to price change. It's an indicator which we call 5, moving average of 5. And we have the red, which is also a moving average, an exponential moving average of 8. And we have the blue, which is an exponential moving average of 13. Because what we want to have a way that we can enter early and exit early. And we have to do several confirmations to know, oh, we are good, we are good. This indicator is very reliable. So, this is the leap. The green, which is indicator EMA 5, is the leap. The red, which is EMA 8, is the teeth. And the blue, which is EMA 13, is the jaw of the alligator. The jaw. So you can imagine an alligator having a jaw. This is the jaw of the alligator. This is the teeth of the alligator. And this is the lip to lick of the alligator. Now, in any trade that you do, once the green, which is the lip, crosses the red up, once at the point it crosses it, place your buy. For instance, at this point, the green crosses the red. This is a point you can buy. And it continues. This is 1 hour time frame. It continues. It did as if it was going to come to it. Always allow it to cross before you exit. So, and at this point, it was just hovering around it. Now, this responds very fast to price. Once it crosses the red, you buy. If it crosses the red downward, you begin to sell. At the point it crosses this red downward, you begin to sell. Now, look at this. At this point, this is the red and this is the green. It was buying at this point, and at this point it crosses. You can exit here. Some people can exit here for longer pips, but you can exit here. It's still safer for you to exit here, and because it crossed both. So when it crossed one like this, you exit before it even crossed this one. It did a short sell because it crossed down. This is the short sell that it did around here. This is a short sell before it crossed again upwards here to buy. And these are wicked markets. Again, did this to cross and crossed here. So at this point, it made a long run. So at this point, market can be very, very deceptive. But there is nothing bad in moving in and out to be sure that you are on the right side. So once it crosses the red up, you are buying. If it crosses down, you are selling. So this is the red. Now at the point you have your blue away from the red, it means that you are good. So you have green, red, and blue. You are good. Once it's far away from here. Now, when you cross to sell, the blue might not move immediately, because the first that will cross is that the green will cross the red, and the green will now cross the blue. But at the point it crosses the red, that is when you begin to sell. So by the time it crosses this place and is going, the red also is following to cross the blue. And before you know it, blue will now be up and the 2 will be down. So the moment you have that is like a confirmation to continue to sell for a long time. So at this point, we have been doing what? We have been buying here. That's our green. It came close to it, then it went up again. At this point, it came very close to it because this is what? Consolidation. And at this point again, it crossed here. It's safer for you to actually get out of here. It's just touching it. It's safer for you to get out of here. And at this point, it's just wrapping around it. Not a clear indication, And you are watching the blue. But if you look at this point, it crossed and the red also crossed. So at the point that this one had crossed and you are in, and the red also had crossed the blue, most likely you are going to be on the other side for quite a while. So, and that happens until this point again at where you now have your green crossing the red here. So it's the point of exit. This market was very, very shady. You can see that JPY has been very shady. And that is why I have to come up with this indicator to guide us. It's been very, very shady. So you saw it just moving on the upper zone. It's very shady. Scalper might be able to use that. Now, at this point, the green crosses the red. This is where you can do what? Place a sell. You begin to sell at this point, and it crosses the blue. Then later, the red crosses the blue. Of course, you've been selling around this point that it crossed, but later, the red crossing the blue is more reassuring for you because the red has crossed the blue and is giving it like a space. And at this point, it went all the way down and it has tipped upward. At the point it's tipping upward, it's telling you that most likely we are coming to the end. And as it's touching it, you can cash out of here. You still have decent pips to get. Once you cash out of here, you still have something decent to get. If it has not hit our TP. The use of the indicator is so to guide us in case the trade didn't hit our TP and is crossing. Please get out. You can also inform the house. Take whatever you have and get out. So, but if it hit our TP, fine. We'll just be looking for another place to move in. Now, let's now see how this thing will confirm what we're going to do tonight. So this is 1 hour. And I said I'm going to place an entry around this area. I expect the price to still come down to pick us before moving up. So it's an odd indication because everything was just wrapping around here. A short sell here and a short buy here. Another short sell here. So you can see that at this point on 1 hour, it has crossed, the green has crossed the red. The green is on the blue. And the red is just parallel, touching the blue. I hope you can see that. So the green had crossed the red. So this is the point we can place a buy. So, and my buy limit is going to be somewhere here. I'm going to dictate it. I'm going to send it to the hub. And it already crossed the blue. It has crossed the red. It has crossed the blue. And the red is just laid to the blue. So once the red crosses the blue, we're going to go on for a long buy. Maybe not too long, at least to hit our TP. So it looks good for a buy. This thing does not look good for a sell anymore. If it's going to sell, then I don't expect my green, which is the lip, to be like this. The lip should still be very close or touching. But that the lip had crossed and crossed, the setup is for a buy. The setup is for a buy. So we will still have to, even using the alligator, we'll still have to do what? Determine our exit and our entry. But of course, it can guide us. Let's look at this alligator on our 4-hour candle. Most of the time, people use it on 4-hour candle to rake in big money. On a 4-hour candle, so you can see that on a 4-hour candle, our entry was really around here. The thing came down, and it was at the point on 4-hour candle that it crossed it. So anybody could have just entered here. It went off and on and wrapped around it like a consolidation, too much of a consolidation. Eventually, this happened. It crossed both of them. It crossed the red, crossed the blue, and later the red now crossed the blue. And this went on for how long? For close to 2 weeks, and until here again. So this is where we were having problems and issues before we got out. So if we had cashed out at this point, we would have probably had something decent. Probably, let me see, what would have had? Would have had, let me enlarge a bit. We had about 650 pips or thereabouts. Let me see. What's wrong with you? What's wrong with you? So probably at this point is where it touched it, then back to the where it crossed. So that's about 500 pips. Would have had about 500 pips, but I think we still had about 600 or 650 pips. But of course, it will always guide us. It will always guide us. You won't lose much. That's just using the alligator on a 4-hour candle. That is when it's trending. When it's like consolidating, we switch to 1 hour. That means it has made us to do daily or a swing trade of within 1 week, so that we can still get something within a week. For now, that is what we have. Then let's look at USD JPY. USD JPY. USD JPY. With our alligator. I'm not going to be explaining how I came about my whatever again. I did that already with Mexican peso and JBP JPY. So our entry, of course, I use this also as my entry, all these things to confirm my entry. So our entry, this one gave entry out here, and at this point it said get out. So anybody could see this on time and get out from this point. One will have a decent exit. One will have a decent. So we'll more or less be using this as our exit point in case market is momentum has changed. We'll use it as our exit. So it crossed and it crossed. See this like gap here for a buy and a crossing and here. So now this is where we are. There's a whole lot happening around here. There's a whole lot happening around here on 4 hour, and if you want to trade this with consolidation, of course, it has to be on a 1 hour time frame. So the last 2 weeks, you can see USD JPY. Just like I explained the other time, this was just on the upper zone here. Price plays on the upper zone, the first and the middle zone. And last week, it just between, it crossed the middle zone to the lower zone and it's there. So what this thing is going to do, most likely is going to buy. But mark you, like I told you, there's a tendency for this to break and move out of here. But when the price is ready to do that, we will see. We need this indicator for now to monitor their activity and trade without fear. So if I want to enlarge USD JPY. This is 4 hour. Even at 4 hour crossing, and this will be an exit point. So let me go to 1 hour candle on that. This is 1 hour candle. This is 1 hour candle. So it bought and we exited around this area. I remember that we hit TP around this area last week, and it crossed, and it crossed around this area, but just partially. Then it went up again. Usually when you are seeing things like this, it's not too good. Wrapping around and wrapping around is not too good for trade. It's not too. So once you exited, you have to wait until things laid out or lays out clearly, like as you can have it here now. This is where we are now. You can see properly that it had crossed as if it's what is selling. So it's selling and we want to buy. If you see the mouth already, it's closing up, and we'll be placing our buy limit around here or around this point. So we expect the price to get to this point or to this point, which is the lowest part of the zone created. So we expect the price to pick us here before buying. So our entry here is going to be very early to enter into buy. So we are using these as two possible entry to buy USD JPY, and probably will exit up there. Now let's look at this alligator on 30 minutes to see what it looks like on 30 minutes. Now, like these are the wrapping around. So on 30 minutes, you can see that it's closing up. It's already touching it. It's warming up to buy. You can see on 30 minutes, it's warming up to buy. So, and we are still going to wait for the price to make it a bit down to pick us until it crosses it. And once it crossed both the red and the blue, and the red also crosses the blue, we are good to continue to buy until structure changes. That's for USD JPY. NZD USD. I'll just be the last I will take before I take questions. NZD. And NZD on 4 hour. Let's look at NZD on 4 hour with our alligator. Of course, the price crossed here to buy, and this also more or less was behaving like JBP USD, JBP JPY. So it crossed here and another crossing here for a week from one bottom up here. So, and at this point, what we're likely to do, because it's on 4 hour, the alligator is crossing here, so anybody should end selling on 4 hour here. That's the meaning. The alligator had crossed the red line here on 4 hours, so anybody should end selling here on 4 hours. So let's look at it. It would have crossed more on 1 hour. So of course this one we are buying. See, on 1 hour it has already crossed. It has already crossed, and the red also had crossed. It's been buying. So what we want to do is just to trade a short pullback, maybe to this level or this level. So we are looking at this entry and at this entry to trade a short pullback and to cash out here and here. So that's what is going to happen. So because already it's been buying from here, so we didn't analyze this particular pairs on time. So, but we can still get something out of it. So, we'll trade a pullback here, a possible entry here, and a possible entry here to cash out here or here in the coming week or next week. So for now, I wanted to call it a day. And if you are